Hi everyone, this is Alex King at Sestrian Capital Research. We're here to talk about Tesla's earnings today. Q3 reported after the close today. Before we go on to Tesla, just take a moment to look at the disclaimer which is on your screen now. In short, nothing you're about to see or hear constitutes investment advice, and you should be aware that Sestrian Capital Research staff personal accounts are long Tesla stock. That's long Tesla stock. Okay, without further ado, we'll move on to Tesla. We're here to talk to you today about Tesla earnings. Tesla reported its Q3, that's the quarter ending September this year, after the close today. Tesla is obviously an incredibly well-followed company. You'll find it discussed literally everywhere all the time. But there's one thing that's very often not discussed, and that's the numbers. And so we'd like to just talk you through Tesla's numbers. Our method of analysis on Tesla is very simple. We look at the numbers, we look at the stock chart, and we ignore everything else. We cover the stock in our newsletter, Sestrian Tech Select, and we'll post a link to that in the comments field below this video later. Okay, let's just talk through how the quarter went. So, first of all, revenue very strong at just under 21.5 billion. Versus the prior quarter, that was up 27%, and versus the same quarter last year, 56%. So for a business to be growing revenue at 56% via prior year, when the September quarter last year was just under $14 billion, that's a large company growing revenues at a very, very rapid rate. Trading 12 months revenue, just shy of $75 billion. That's up, again, 60% on last year. This time last year, which was flat on the prior quarter. Cost of goods sold. Cost of goods sold that's all the variable cost that goes into making stuff. So in a car company like Tesla, you have a lot of cost of goods sold. You have a lot of parts that you buy in. And so your gross margin is relatively low at 25% versus a software company you'd expect to find in the 70s, 80s, sometimes even 90s%. Trading 12-month gross margin, 27%. Now, that may not look much if you're used to software companies, but for an automotive business, for a manufacturer, that's extremely strong. Operating income came in just shy of 3.7 billion. And for our profitability measures, we like to focus on cash flow, because any measure of earnings you choose, be it earnings per share, be it EBITDA, operating income, whatever you like, they're all accounting concepts. So we like to use earnings to get to cash flow. So just briefly, the company delivered trailing 12-month EBITDA of $17.7 billion. That's a 24% margin. Again, very strong for an automotive business. And then if we just skip through to cash flow, CapEx of the quarter was $1.8 billion. Change in net working capital, that's something that most people don't understand. What that means is, did they collect cash faster than they paid it out, or vice versa? In our sheets here, a black positive number means that cash arrived in the door faster than it left the back door. A red number means that cash went out the back door faster than it came in the front door. Tesla's very, very good at managing working capital, and that's because it collects most of its cash up front before delivery. You'll see they have something like 6 or 8 days sales outstanding on their balance sheet, and they have something like 60 days payments outstanding on their balance sheet. That means they collect cash an awful lot faster than they pay their suppliers, which is the sign of a strong business. So in the quarter, unlevered pre-tax free cash flow was $3.4 billion, and for the last 12 months, nearly $10 billion of unlevered pre-tax free cash flow. That's just a lot of money. And on revenues of $75 billion for the trailing 12-month period, that's a 13% trailing 12-month cash flow margin. Again, for an automotive business, that's incredibly strong. If you were to go and look at your Fords, GMs, and so on, there are hardly any auto businesses in the world that can sustain this kind of cash flow margin at that level of growth for that long. Balance sheet, incredibly strong, $21 billion of cash. There's a little bit of debt, which is predominantly funding their financing schemes. So net debt just shy of $18 billion. So in short, fundamentals for the quarter were very, very strong. Growth accelerated, cash flow margins ticked up, gross margins held steady. Very solid quarter. If you'd like to see our outlook for the stock, where we think the stock can reach, and how we think that can be played with a stop loss and profit targets, then click the link below, head to Cestrian Tech Select, our newsletter, and you can see a full earnings report and stock price targets there. You can take a free trial. You don't need to pay anything. Just click through the paywall, and you can see our outlook for the Tesla stock right there. Thanks for listening to another of our YouTube videos. Don't forget to subscribe to our YouTube channel and click alerts so you get a heads up every time we post new material. Thanks a lot.